learning how to be patient. I think a lot of people, just because of how the world works and how quickly we can gain information and get information, the expectation is tomorrow I'm going to be on my yacht, as you said.
Hello, and welcome to this week's episode of the Real Estate Investors Club podcast. I'm here with Kurt Warner, who is from Toronto, I'm pretty sure. We met through some real estate education kind of a context. I think Kurt has since moved on from there, and we're going to just get into his story and hear a little bit about what he does. So, Kurt, maybe you can take me through your journey through life that has led you to be sitting with me today on the Real Estate Investors Club podcast.
Okay, I won't go back to the very beginning when I was born in childhood. But I guess the story kind of starts when I went to university. My mom owned a few properties just outside the Toronto area, so condos and eventually a townhouse. So she decided to actually do what a lot of us probably dream to do, especially this time of year, is move to a nice tropical island. So she did that when I started university. So I was left managing properties and I had no idea what I was doing. So did that throughout, from 99 till about 2004 when I finished university. And it was a great learning experience for me. There were some good times, definitely some bad times managing properties, and learned the hard way. And I started working at a local newspaper doing advertising sales. And so I was there for about 2.5 months. And I remember my boss calling me into her office on a Thursday morning thinking, it's a pep talk before going out and talking to new clients. And so I sat down and she actually fired me. She said I couldn't sell and that they were letting me go. So first job out of university, got fired. Awesome. So I spent the summer trying to figure out what I wanted to do next. And my girlfriend at the time, her best friend worked for a company that taught people how to invest in real estate and the financial markets. And so I was interested. I knew she traveled quite a bit throughout Canada, the US as well. And so they were actually hiring and I applied. So I started off in sales with that organization in 2004 in August and worked there pretty much up until 2019, but always kind of advanced transition roles within the organization, from sales to marketing management to sales management to operations management, and ended up being the general manager for all of Canada when I left back in 2019. So that's kind of my professional career, so to speak.
And what happened with the investing? So you managed the properties for your mom. Did you go on to invest?
Well, I did. And so, as I said, I started with the company in 2004. So in 2007, myself and a couple colleagues decided, hey, let's start investing in real estate. I spent the first few years just trying to figure out what I wanted to do, whether it was real estate, stock, or something else. And after the conversation, we said, okay, let's start investing in real estate. So in 2007, we actually bought a property that was in pre-power sale. Which we had appraised at $740,000, and we bought it at $590,000. So at the time, we're thinking, okay, we've made it. We're going to be these real estate moguls. We're going to be billionaires in the next couple of years and grow this business. And although we bought the property well, we had it financed completely hard money, so we had no money in. We were actually able to give the seller, who was a woman that went through divorce, $30,000 on closing, which was also a good feeling for us to help because she had a couple of young kids and just needed some money to obviously pay off the existing mortgage, but also pocket money to kind of make her next move. So we felt good about that. Now, where we failed is we saw dollar signs and we had egos. And so although we had this beautiful executive home that was ours, we didn't stage it. We didn't do any landscaping. We hired an agent that was not good, didn't do a good job of marketing the property. And because we had obviously taxes, insurance, utilities were minor, obviously nobody was in it, but we had this hard money loan that we were paying every month. So as we figured maybe 2 months to sell. At the time we acquired the property, the market started to soften, not having a good realtor, not attracting buyers, not doing anything. It sat for, I think it was about 6 months, 7 months. And it got to the point of us having to lower our asking price. And after all, everything was said and done, we ended up losing money on that deal.
Oh no.
Yeah.
Wow.
So that was my first foray into real estate investing. So, like some people do, and I've learned not to do this anymore, but I decided to give up in real estate and I said, real estate doesn't work. So I started learning how to trade stocks, options, and Forex. And I did that actively from about February, March 2009. So essentially the bottom of the market for years. And I thought that was it. I'm just going to trade, and had good years, bad years as a trader. But one thing that I realized is that financial markets and trading wouldn't allow me to leave a legacy or anything for my kids. So I decided to take a break from trading in 2017 and spent a year just really working. And I was kind of bored. Like I had gotten used to trying to build and, educate and learn. So it was kind of stagnant for a year. And I went to lunch with two very good friends in 2018. I think it was June. And we've had many conversations over the years about wanting to start a business together or do something outside of our 9 to 5s that we could do collectively. And I think it was one of those times where everybody hated their job at the same day and time. And we decided, okay, we're going to do something. It's going to be real estate investing. So it's like, all right, if we're going to do this, let's do it properly. So we took courses with that organization that I was with, and worked with a couple of the mentors, and got incorporated in December 2018 and acquired our first multifamily property in April. So that was kind of getting back to real estate, and we've been buying and selling properties since then.
And which market are you in?
So we focused primarily in Sudbury, and also we have a couple properties in Timmins. Now, when we started out, it was obviously doing market research, trying to figure out where we wanted to invest. Our goal was cash flow. So being in the GTA, like I'm in Milton, well, one of my partners is in Milton as well, in Brampton, we couldn't find anything that cash flowed back in late 2018, 2019, even with rates where they were, property prices not as high as they are, going through COVID. So I started researching different markets, and people were like, okay, try London, try Kitchener, try Windsor, try, Hamilton, and running the numbers. And we wanted to be very conservative in our, analysis of properties. So what turned out for us was Sudbury worked well. When we were looking at, the cost per unit, for example, the first property we got under contract, which we ended up walking away from for a very funny story, was about $50,000 per unit. And then we also looked on the East Coast. So that is why we chose Sudbury, and rents were still pretty strong for that area. It also had a very diverse economy. It wasn't just mining. They also had mining, education, technology. They had universities there. They had a hospital there. So we felt it was a very stable market for us that also provided cash flow.
And so tell me about researching that, because I'm in Montreal. I got to over COVID driven out of Montreal because the cash flow wasn't working for me anymore. And I had the experience of like mapping a secondary market and kind of getting into that. But like, what was that like for you guys? I mean, did you physically go there? Like, how did you go about, making your decisions and familiarizing yourself with the terrain?
So my business partners make fun of me because I don't really look at pictures even on listings or anything I get. I just looked at numbers. So I looked at the population. I looked at the cost per unit. I looked at things as the debt service ratio, the cap rate in certain areas. So it was all numbers driven. Looking at, is the population growing or shrinking? What is the demographics like? Are there a lot of old people? Are there young families? So all of those things kind of factored into the market analysis, but never looked at a picture. So the first property I mentioned we got under contract was 10 units, and we had it under contract for just under 425,000, 420 to 425, some weird number in between there. And so we decided to actually go up and see it because my business partners were not like me, and they actually wanted to make sure the building exists and not just numbers and cash flow. So we went up and actually saw the property, and our realtor actually was on vacation at the time that that I've been kind of communicating with, that we got the property under contract. So he actually left his vacation early from Florida in February to come to Sudbury. Yeah.
I need his number, man. That's some incredible service.
He is amazing. And so he toured the property. It was not one that we wanted to pursue just because of the tenancy, the amount of work that the building needed. I still kick myself because I think it was a great opportunity. There was vacant land beside it. And then beside the vacant land, there were a new commercial building. There were a couple car dealerships across the street. So I saw it, as an opportunity for us to, buy that property and possibly sell it to future development for commercial. That has not happened yet in that area, but I wouldn't be surprised if it happens at some time. So we did actually make a couple trips up to Sudbury to see properties. So we toured a bunch. We had a lot of fun doing it, just our personalities. But at the end of the day, we ended up, finding and acquiring our first 6-unit property in April 2019.
But still, so okay, so a lot of numbers. Like I could see that the fundamentals of that are good. You did make a couple of trips up there, but like, tell me, like, what did you do to feel like you had boots on the ground that could help you? I mean, I assume you have a property manager up there.
Yes, we do.
And even you used a Toronto agent to buy a place in Sudbury. You didn't use a Sudbury agent. Like, explain that to me.
So the agent actually is in Sudbury. Gary, shout out if you ever listen to this. We love you. But yeah, we used a local agent who knew the market very well, who was from Sudbury. He actually had a small business in Sudbury as well. So he had a very good sense of what it was like to be an entrepreneur. He had a good sense of the real estate market. And he introduced us to our entire power team. So for the 6-unit that we closed on, when we put an offer out, the second time we went back, Gary invited the property management manager to kind of walk through the property with us. So we could obviously get to know them a little bit and hear their thoughts on what we could do with the property, with the tenants, to actually generate the most amount of cash flow. So after meeting her, we felt really comfortable investing, in a market that is, basically a 4-hour drive from where we live. And we loved her ideas. So, that property, had solar on it. But from a property management standpoint, one of the cool things that she said is, we had a front entrance. She said, why don't we turn that into a on-site laundry, coin operated, to increase revenue for the building. There was a little shed in front full of light garbage. So she said, we'll clear this out and then we'll offer that to a tenant or two to use as storage, which we did. And then we had additional parking spots in the back. And then behind the building were commercial properties. So we actually rented out a parking spot to somebody as well. So we now had a property that not only had rental income, which cash flowed on its own, we had solar income, we bought the building with solar, which was awesome. And then we were able to generate laundry, parking, and some storage all in one building. So, which was awesome. So having a good property manager was key for us. And also having a great realtor that started to understand what it was we were looking for. We did not want anything that you wanted to take a stick of dynamite to and blow up and start from scratch. But we also didn't want things that were completely turnkey. We wanted something where, we could do some renovations when tenants moved out, increase the rents up to market, and then increase the value of the property. So that was our strategy.
And so you're kind of touching on it, I guess, but I don't know if there's any way you could describe your business model. I think, I asked you if you could throw together some numbers that could help people, understand the kind of deals you do. But along with that, maybe if you can speak to different investors have different business models that looks at, okay, you've told me the kind of market that you look at, is there something specific about the properties that attract you? And then how do you, put that all together with your magic ingredients?
So I would say our strategy really relies on finding properties that cash flow as is. So with the existing tenants, or if they are vacant properties, which we've done a couple of those, that when we do bring tenants in at market rents, they do provide cash flow. Ideally, what we want is upside. So for instance, another 6-unit building that we purchased, it was fully occupied. And when we acquired it, I think we've turned over so far 3 units, and that's about a year and a half ago. So with each unit that we turned over, we do go in, we do talk to our property manager first, and we get a sense of, what are market rents? And then we'll look at the cost to rehab the property, whether it's paint or kitchen or a bathroom, whatever repairs need to be done. And then we have them tell us, okay, if we spend X, let's say it's 15,000, how much could we get in rent? If we went to the high end and maybe it's 25,000, how much could we get in rent? And then we'll analyze what the impact is on the net operating income of the building, which then allows us to determine what is going to be the value of that property if we decide to sell or then also refinance and pull out equity and then move on to the next one. So that's kind of been our business model throughout. I think COVID, obviously, with the tremendous increase in property values, we did actually sell a couple properties towards not quite at the very peak, but close to the peak of the market, which was something unexpected. We had a plan of 5 to 10 years of, okay, the property is going to be worth this. And when it was above that, we're like, okay, we could just sell and then, start acquiring other properties. So that was kind of our business model.
Mm-hmm. And so tell me, like, what's happening now? Because so you liquidated at the right time. Everybody, sometimes those decisions are like just fortuitous. You do the right thing at the right time.
Mm-hmm. Yep.
So what are you doing now with the changing conditions?
So now things have changed, and within our business, with my original partners, just due to life circumstances, we're still good friends. We still enjoy hanging out, but we've decided to not acquire any more properties together. And so I'm actually working with other people that from the same company. And right now we've been looking at larger properties. So we were working on a self-storage, or actually 3 self-storage facilities. Just couldn't come to an agreement with the seller. And again, it was off market. So a lot of what we're doing now is off market. We're not looking at anything that is listed. So just through building up relationships and connections with other investors and with realtors, we're looking for people to bring us off-market deals, analyze them, and that way we're not competing with any other investors. And we're also able, in some cases, to deal directly with the seller. So the one that we're working on right now, and we're just preparing different options. So we've had conversations with the seller. They are trying to move into more development. And so they've been liquidating their portfolio, and they have 44 units left. So we're going to be presenting 3 options to acquire 44 units in Northern Ontario as well. So that's really what we're working on. And the strategy is the same, looking at, it's 4 separate properties. We came up with, a price that a seller wants, that we are comfortable also offering. Now it's about structuring the deal and how we can finance it. So right now, one of those properties is vacant, completely vacant, and that's a 10 unit. So we're actually going to end up purchasing that one for $1 and the other 3 for the amount that they want, with the goal of getting the tenants in, getting a track record of income and expenses, obviously, and then going to refinance that, pull out some money from that to use to pay back investors and ourselves for the other 3 that we purchased. So that is really that strategy, and obviously put property management in place and just cash flow.
Okay. Have you really been listening to the episode, or has your monkey mind been taking you off in one direction or another? Our mental habits can be our biggest assets or our biggest liabilities as we pursue certain goals. For me, the biggest performance gains have always come from training my mind. In my book, Mindful Landlord, I talk about how you can train your mind and how you can apply some of these strategies to your journey in the real estate field. The book is available on Amazon and also on its website, mindfullandlord.com. Now I'll stop evangelizing for the power of mental training and let you get back to the show. So I think one of the takeaways here, maybe for our audience is that, and this, it happened to me as well. It's interesting as I talk to other people who've live in urban centers where maybe the cash flow doesn't make sense, is basically your business model forces you to look elsewhere.
Mm-hmm.
And I think that that's something that we're going to see increasingly, and it's not necessarily something to be scared of. It's something that you need to have your way of, researching and vetting a market, getting to know it. Maybe for some of it, it's more, research and numbers based. I know for me, when I wanted to start investing in my secondary market, I just spent a lot of time on the ground there, get the feel for the place, and intuitively I was like, okay, this part of town good, that part
Mm-hmm.
of town bad, and the numbers made sense for my business model. So I think that's kind of an interesting takeaway. if I can kind of switch gears a little bit, one of the questions that I ask most of our guests, just because I feel like that conversation is lacking from a lot of investment things, is what kind of lifestyle hits did you take to go on your investment journey? Because I think like a lot of times, people they have a day job or they have something about their life where there's like this comfort zone of the life that conventionally everybody has. And then we go on this like investor's path. And before you start, posting photos of you with yachts on Instagram, there's a long way between when you make the decision and when you begin reaping the kind of success we all dream about, right? So can you tell me about some of that?
I would say that, personally, I like to say that I've gone through two midlife crises, and I'm still, close to, well, I guess I'm mid 40s now. But yeah, definitely that has been a challenge. Obviously there can be a hit to the amount of time, especially when you're starting out, that learning growth phase. You're investing a ton of time in understanding what real estate is. It's one thing to go through a course and get the kind of book education on, okay, what is debt service ratio? Like, what is a cap rate? What is a coverage rate? Like all of that you learn. But when you actually go to start applying it, it takes more time. So you go through that education phase where you're spending, 10 plus hours a week, and then you fall in love with real estate. And like I remember before we did our first one, I probably analyzed, not even just looked at, but analyzed in and around 100 properties. And so it takes a lot of time. And then I love Excel, so building Excel models and how to analyze and become more efficient. So I'd say the lifestyle hit was definitely time, and for me that resulted in getting separated and divorced. As part of that, I don't want to attribute all of that to it. There's other factors, but definitely time played a role in that. So that sacrifice is huge. I think the time, and I would say that anybody that is starting out, that you make sure you don't forget other aspects of life when you're getting into real estate investing. It can grow and it will grow. It doesn't need 24/7 in order to make it happen, although it might feel like it initially. And also learning how to be patient. I think a lot of people, just because of how the world works and how quickly we can gain information and get information, the expectation is tomorrow I'm going to be on my yacht, as you said. You can get there, and it will take time. And I think you just have to create action steps that you can do every day, and just to plan things out and to say, this is going to be a 5 to 10 year kind of journey and process to get to where I want to be. And a lot of times you get there earlier, but at least if you say 5 to 10 years, you're not sacrificing other aspects of your life, and you're not missing out on other aspects of life on the journey to getting that success you want in real estate.
Yeah. I think that's I'm glad you brought that stuff up. I think I on the show I get to interview people like younger people, older people, and for people like who are in our age bracket who are looking at getting on this train, the
Mhm.
reality is that the lifestyle hit is often a time lifestyle hit. Like when you're younger, you have more time, and your time is not worth as much in like dollar value as let's say our time is at this time in our careers, right?
Mhm.
But you have kids, you have family, you have all other things where like you can't move to a grotty submarket. Like you're not going to move to Sudbury tomorrow to become the king of Sudbury, but if you were 25 years old, like maybe you would consider doing that, or maybe you would be house hacking, or maybe you would be doing something else, like taking a different kind of lifestyle hit. So I think it's interesting to hear the span of whatever people's life circumstances are. It ends up being different, and I think that for people who are like our age, that's a reality, and it's a reality you need to, the sacrifices you make, be realistic about them, and be realistic about the toll that they take, and manage that
Mhm.
responsibly.
I think, one thing I know other people go through kind of in our age bracket, even those that might be a little bit younger, a little bit older, if they're in a situation where they have a 9 to 5, you know, a lot of times, unless they're working from home, they can't work on their real estate business, while they're working. So they have to figure out when that time is. And I was fortunate, just the, company I worked for promoted investing in real estate and financial markets. So it kind of tied in with what I was already doing, but it still, takes time. So I would say for anybody starting out to figure out if you're somebody that is a morning person, get up a little earlier in the morning and work on your business then before your day starts with kids and work and other responsibilities you have. If you're like me, a night person, then it might mean sacrificing a little bit of sleep and work when everybody else is in bed for a few hours. And you just have to figure out when you can plan it where it's not interfering with everything else you have going on.
Yeah. So, and I think this kind of ties in nicely to my last question, which is, what in the industry should we be talking about that we're not talking about?
I think initially, I think 2022 is interesting. Obviously, we saw rates go up tremendously, and a lot of investors, that weren't doing research, weren't paying attention to the signs, lost money, especially those that were trying to flip properties. So I think right now, one thing that we're not talking a lot about that, I'm hearing, and, it goes back to, I guess, the first property I ever bought, which was a pre power sale or pre foreclosure property, is to look for those opportunities where you will have investors and even homeowners that can't afford to, pay their mortgages. And not from the standpoint of, hey, I'm going to jump in and get this property at a deep discount, but you have the ability as an investor to help people out of a bad situation. So I think talking more about how, as investors, we can help people, other investors and individuals that are facing a tough financial time, not being able to, cover their mortgage payments or buying properties that no longer cash flow, and helping them out. So I think that's something that probably needs to be talked about more, because we've talked about the interest rate hike, and, investors have adjusted. At least on the buyer side, we've adjusted. Sellers, you guys need to catch up. Buyers have adjusted, and we know how much we can pay or should pay for properties right now in this environment. Sellers need to catch up. That's the other piece. It's interesting when you put an offer out and you look at the numbers and you're like, I know you wouldn't buy this for that price at this interest rate because it doesn't cash flow. So why do you expect me to? So I think that also has to happen.
Yeah. Yeah. Good advice. Kurt, is there anything I left out? Anything you want to highlight?
I would say nothing that's left out, but anybody that is either, partway through their journey as an investor or just starting out, it is and can be a grind. It's not, easy like you see on YouTube videos and TikTok videos and Instagram. That is not the world of a real investor. I think a real investor does put in work, does put in effort, does put in time. At the end of the day, there is definitely a reward. One of my business partners is in Ecuador for the next 3 months, reaping the rewards of, a career of investing in real estate and doing it the right way. So I would say patience.
Patience. All right. Good place to leave it. Kurt, thank you for spending this time with me, sharing some of your wisdom and experience with our listeners. What's the best place people should get in touch with you?
There's a few. So myself and another business partner, we've started a community on Facebook called Thrive Community. Definitely reach out there. We do free webinars, workshops, things like that. Just trying to help other investors that are, trying to actually get into this space and to thrive in it, hence Thrive Community. I also started my own business called Life Balance Mentor, and really that's aimed at helping investors, entrepreneurs try to balance, life, growing a business, health and wellness, and all that kind of stuff. Because I think investors and business owners, we get so caught up in trying to build a business that other aspects of life kind of fall apart. So I'd like to help as many people as I can, and have a few podcasts that I do as well.
Great. So if you send those to me, I'll be happy to drop them in the show notes. And so Kurt, thank you again for spending this time with us.
Thank you for having me.